Well, good morning. Is this working? Yes, it is. Good morning, everyone. Welcome to the Foreign Correspondents Club of Tokyo of Japan here in Tokyo. I'm Anthony Rowley, a former president, and I will be moderating today's event, at which the guest speaker is, to my right, Hiromi Yamaji, who is Group Chief Executive Officer or CEO of the Japan Exchange Group. And we're delighted to welcome him here today. He'll be talking about factors behind the Tokyo stock market's recent recovery, as well as the Exchange Group's future initiatives. The Exchange was very much in the news, of course, earlier this year when share prices surged, took the Nikkei average through a record 40,000 level. But that's not the only thing. Of course, the Tokyo Exchange Group, along with other agencies and bodies, has been putting great efforts into improving the experience for investors, domestic investors and foreign investors here in Japan. And I'm sure that our guest will be talking about that, among other things. So I will say no more. Except, please, if you have a cell phone, put it on manner mode or switch it off as a courtesy to our guest. So please join me in welcoming our guest. Thank you, Your Majesty.
Well, thank you very much for the kind introduction, Anthony. And good morning, everybody. I'm Hiromi Yamaji. I'm a Group CEO of Japan Exchange Group. I'm very glad to be here today to talk to you all. And as has been widely reported, the strong momentum of the Japanese market, especially the cash equity market, has caught the eyes of the global investors. I believe one of the convincing pieces of evidence for the investors was that in 2020 August, Mr. Warren Buffett publicly shared his interest in the Japanese trading companies, and afterwards increased his investment last year spring. Since then, the Nikkei 225 has rose more than 51%, and Nikkei 225 and topics hit the record high, rewriting history in 34 years. Over the summer, there was a sharp fall, but just this Tuesday, the Nikkei 225 hit 40,000 yen again. The market's move is backed by the record high performance of Japanese companies. Earnings, share buybacks, and the dividends are at a record high. And corporate governance reform is making a good progress. It is not only the cash equity market. With the BOJ's monetary policy change, the Japanese interest rate market is becoming more active, attracting interest from global investors. Our JGB futures and short-term interest rate futures trading volume, as well as the clearing volume, are increasing steadily. The power futures or electricity futures market is in its early stage, but there are major players joining, and given the importance of Japan's real energy needs, we are actively promoting for its growth. So as the Japanese economy undergoes significant changes, Japanese market overall is at a very interesting point of time in history. Over the past years, I have met more than 100 investors and spoken at conferences not only in Tokyo, but also in London, Singapore, and New York. The question has shifted since last year. Last year was, is this time different? Is this another temporary tide? But now the investors are seeing the transformation in the market and the Japanese companies. Now the question is, how long will this momentum continue? Or how will Japan continue in its path? There's room for improvement for sure. And that is precisely the reason to see that there are attractive investment opportunities in the Japanese market. Now, even those cautious and not convinced yet have to look at Japan. Today, after I introduce JPX, I would like to mainly focus on the cash equity market's continuing growth and the Japanese company's transformation, which is the key to its sustainability. First, about Japan Exchange Group. JPX operates 3 exchanges, and as a market operator, we are committed to making the Japanese market more attractive, not only the cash equity market, but also the derivatives market. Since 2023, April, when I became the group CEO of JPX, JPX has been putting forward various initiatives. Tokyo Stock Exchange, TSE, which operates the cash equity market, has been operating the carbon credit market since October 2023. ETF market globally has been growing rapidly, and the Japanese ETF market, which is the second largest market in the world in terms of market capitalization, is also growing. We have been expanding the product lineup, and currently 340 products are listed. We have further expanded the ETF lineup, listing the actively managed ETF in 2023 September. Now 13 actively managed ETFs ranging from Japanese stocks to US government bonds. Next month, November 5th, we will be replacing our cash equity trading engine, so-called Arrowhead, at the same time extending the trading hours by 30 minutes and introducing closing auction. And Osaka Exchange, OSE, operates their derivatives market, and it operates the long-term interest rate futures, JGB, Japanese government bond futures market, and the main market for Nikkei 225 futures. In 2023 May, Nikkei 225 micro futures and the short-term interest rate futures were listed, and the trading volume is increasing steadily. JPX operates the Tokyo Commodity Exchange, TOCOM, for the power futures. JPX also holds JSCC, Japan Securities Clearing Corporation, that clears all listed products as well as the OTC IRS and OTC cash JGB trading. The derivatives market in Japan is growing, but even more, global investors are looking closely at Japanese cash equity market. The record high performance of a Japanese cash equity market has invited more foreign participants. About 60% of the current daily trading comes from foreign investors, and the foreign investors are holding 32% of Japanese listed companies as shareholders. The current momentum is built not on a one-time event, but a continual effort made by all stakeholders in Japan. Several factors are at work at the same time, both within and outside of the Japanese market. Within Japan, the fundamentals of the Japanese economy are improving, both on the business sector and household sector. If we look at Japanese companies, the performance is strong. With last year's record high performance and even this year, the first quarter of 2024 was very good. We are also seeing wage increases as well as increased investment into digitalization and also the automation. Last year, the total capital expenditure made by corporate Japan was more than 100 trillion yen, and the magnitude of the investment is expected to grow further in the next several years, and continuing to be more than 100 trillion yen until 2025. On the other hand, Japanese household sector are increasingly taking on inflationary mindset coming out of the deflationary thinking. We can see this change in the shift from savings to investment. One of the significant government initiatives by the previous Kishida administration was the revamp of tax exemptions under NISA, the individual savings account. The new NISA has led more retail investors to shift from savings to investment. According to BOJ, the household sector's financial assets total to about 2,212 trillion yen at the end of June this year. More than half is still in banks, but the ratio of stock and investment funds are about 19.4%, which is record high. At first, many had assumed that Japanese retailers will invest mostly into US stocks or global balance funds through this new NISA. However, in fact, Japanese retail investors are investing heavily into the Japanese market through this new NISA. JSDA, Japan Securities Dealers Association, published a report for their main 10 securities brokers, which consists about 75% of total amount of new NISA investment. So 25% is from banks. About 9.5 trillion yen was invested from January to August through these 10 brokers. 41% went to domestic stocks, especially high dividend yield stocks. 56% went to investment funds, which was mostly all country type or global balance type. However, about 10 to 20% can be assumed to have been targeting Japanese stocks. Therefore, around 50% could have gone into Japanese market, which is about 4.8 trillion yen. Since foreign investors' net purchase of Japanese stock was 3.3 trillion yen during the same period, January to August, the impact of retail investors' participation was not small. Even using the JFSA, Japan's Financial Services Agency, our regulator, statistics, their statistics over the past 10 years, total of 35 trillion yen were invested through the previous NISA. Under the new NISA, however, just in 6 months, 10 trillion yen, Japanese yen, were invested. What is encouraging is that close to 50% of the new NISA account holders are the younger generation under 50s. So not only the business sector, but also the household sector are making more investment into Japan. Turning to what is happening around Japan, heightened geopolitical risk has also encouraged investment into Japan, as well as a weak yen and low interest rates. In addition, the investors are seeing the progress of corporate governance reform is creating the possibility that Japanese governance discount will be dismissed altogether, and the Japanese company's full value will be realized. Which leads us to the initiative JPX has been pushing forward. As a market operator, we strive to maintain a strong capital market that serves as a platform for companies' growth and investors' engagement. There has been wide coverage about the JPX initiatives as the PBR reform, but this is not the recent program that we have started. JPX, or TSE, has been working on the corporate governance reform since 1999. There has been many initiatives introduced back then, but the reform picked up the pace when the second term of the late Prime Minister Abe pushed the corporate governance reform as one of the key strategic focus to revitalize Japan. The government, seeing that Japanese corporate and business sector's growth as the key driver for growth of Japan, has been pushing the governance effort since then. Together with JFSA and the METI, JPX has been pushing the governance reform. Corporate Governance Code was introduced in 2015, and together with Stewardship Code introduced in 2014, the two codes encouraged companies and investors to implement better governance structure. While these codes have pushed better governance significantly, such as the ratio of independent board of directors increasing, In 2014, the first section companies that had 1/3 or more of the independent non-executive board members were only 6.4%. But in 2024, 10 years later, this ratio increased to 98.1%. However, the purpose of the corporate governance is not to meet these numerical criteria. Rather than compliance on the surface, the real purpose is for the companies to achieve sustainable growth and the mid to long-term corporate value improvement using the proper governance structure as a base. So better governance should lead to deeper discussion at the board level and active dialogue with investors. The corporate governance reform moved to the next stage, which is to strengthen the market discipline and foster more engagement with investors. As a first step, we restructured our market segments and introduced 3 new market segments in 2022 April. These new market segments resorted the legacy market structure we had kept since the merger with the OSE in 2013. With the start of the new market segments, companies were given the opportunity to select which new segments to transfer to. We clarified the market concept and gave companies to rethink their vision for growth and reevaluate their purpose for listing. In order to maintain smooth transition, there is a grace period given to the companies that allows them time for companies to meet the new higher listing criteria. The grace period will be ending next year, March. The new market segments became the new platform and foundation for the company's growth and engagement with the investors. Then, as a follow-up, in March 2023, we made a request targeting prime and standard listed companies to practice management to be conscious of cost of capital and share price. This is a so-called PBR reform. However, our actual request does not ask the companies to trade above book or improve their PBR. We ask the companies to analyze their capital efficiency and disclose a plan to improve and execute the plan. PBR is indeed a useful indicator, but it was just one example of financial metrics that companies should consider using when analyzing their current capital efficiency. Companies can use ROE, PBR, or ROIC, whatever they want. Also, even those companies using PBR do not need to stop at PBR one time, but can improve further. Or those companies that do not trade above book, say trading at 0.2 times the book, can try to improve it 0.4 times the book, and which is better, twice better. Essentially, the request aims to effectively align the company's perspectives with the market expectation to realize sustainable growth. 1.5 years have passed since the request was made, and as we gathered feedback from investors, so far the progress is viewed positively. Many companies have responded to the request by disclosing their plan or starting to implement new initiatives. At the end of September, 88 prime listed companies have responded, with 80% disclosing their plans. 46% of standard listed companies have responded, with 32% disclosing their plans. However, again, the reform has just started. Although we do not aim for 100% disclosure, because it is not about the response rate, we expect all listed companies to have the mindset for capital efficiency as they manage their business. We as a market operator will continue to foster an environment where constructive engagement between companies and investors support the growth of the companies. So lastly, where we are headed to. With the increased market dynamics, corporate actions and investors' engagement are expected to increase. As investors' feedback suggests, those companies who are the front runners have started making good progress. The next challenge will be those needing help in coming up with better plans and those who lack sufficient communication with investors. There are also those who have not even begun this process. To help companies understand the market expectation, we will keep providing necessary resources. Our material often used is the document we published last February, which summarizes investors' perspective and the 29 case studies given from investors. We plan to update the case studies in early November with a reference to examples that show the misalignment or bad examples. It will be anonymous since the purpose is not to shame the companies, but foster better understanding of investors' perspective. Also, since January this year, we have been publishing the list of companies that have responded to our request. We plan to improve this list starting next year, such as highlighting companies that seek dialogue with investors. There are other important initiatives, such as strengthening the IPO market, as we expect large IPO next week, TSE Asia Startup Hubs that supports Asian startups to grow their business in Japan, and mandating English disclosure for prime-listed companies from April next year. We also plan to improve the topics index by tightening the liquidity requirement, making it more useful as an investable benchmark. At the end of the revision in 2028, the number of constituents could be reduced down to 1,200 from the current 1,700. All in conjunction with these initiatives, we hope to revitalize the Japanese market even more. From where I stand, I see that investors and companies have fundamental differences in their expectation and time frame. Companies look toward mid to long-term growth, and investors expect return on a shorter time frame. To bridge this fundamental gap, the key is transparency and trust. Companies need to clearly explain their business strategy, capital allocation, and the progress. But it is not just companies. Investors have the responsibility to lead the engagement and have a meaningful and impactful dialogue with a longer-term perspective. Whenever I talk with global investors, I always encourage investors to actively engage with the companies with a focus on sustainable growth of companies. Market discipline is the most effective mechanism, and investors have the power to encourage change. We as a market operator will keep working on various initiatives to make the Japanese market more attractive. Thank you very much for your attention.
Thank you, Yamaji Sensei. Extremely interesting and very information intensive. Before I open the floor to questions, could I just very briefly ask you a question myself, which is, you mentioned the efforts that the former Prime Minister Abe put, and the same applied, I think, to former Prime Minister Kishida, into promoting the stock market as part of the financial system. Do you expect to see this momentum continue under Prime Minister Ishiba? He has spoken here before he became Prime Minister, but I don't recall him mentioning this particular point. Do you expect to see the momentum continuing under this Prime Minister?
I think, at this moment, I don't have too much information about his, policies in the future, but I believe that, the new administration, I'd like to hope that the new administration have the continuous policy for stimulating, Japanese private sector growth as well as the promoting the shift from investment to savings to investment. Yeah, we really hope that a continuation of those policies.
Okay, thank you. Right, questions from the floor, please. Do we have a question at this point? Yes, please. Go to the microphone, identify yourself, please, and ask a question.
Martin Kölling with the German financial daily Handelsblatt. I was wondering what about the recent battle about the 7&I holdings and the takeover bid of Couche-Tard. What does this symbolizes for Japan as a whole? Is it a kind of battle of the old Japan to defend itself against takeovers, or do you see it as a very healthy development and a new kind of dealing with by Japanese companies with these takeover attempts?
Good, thank you very much. And I usually, as a market operator, we don't comment on the individual, cases. But I think, based upon the fact, which is, as you know, the Foreign Exchange Act. There is a Foreign Exchange Act which requires all the acquisition of the companies in Japan is advanced notice or prior notice before they do. And the Foreign Exchange Act was tightened about 4 years ago. Okay, since then, we are receiving a prior notice or advance notice, more than 2,000 prior notice a year. Okay, and then so more than 8,000 or prior notice, of which but average about 150 prior notice was for listed companies. And in the past 4 years, none of them were rejected by Japanese government or Ministry of Finance. Or if you look at the history of a Foreign Exchange Act, there was only one case which was rejected by Ministry of Finance, which was back in 2007, when the TCI, the Children's Investment, tried to purchase 20% of J-Power. Okay. However, J-Power is operating nuclear power plant in Japan, and also they are doing electricity transmission service in Japan. None of the countries in the world allows foreign investment into those kind of very, very core infrastructure company, I believe. So, and also next point, this is also a fact, okay? According to the CLSA's the analyst report, OECD made a very detailed study about the country's openness for the foreign direct investment. Japan is scored as better than the average, OECD average, much better than US, Canada, or New Zealand, and Australia. Japan is open for foreign direct investment. So the point is that I think, as a market operator, we welcome everybody as far as they follow Japanese law and also our rule. And I think, this one is so visible case. We have been watching the case very closely, but at the same time, transparency is very important for, they have to give it to the Japanese investors because, shareholders of 7&I is a majority of the shareholders are Japanese investors. So we have to give them, transparent information about what the offers are. And at this moment, I think 7&I is already disclosed their response to the first offer they received. And I think that kind of exchange of letters, that's good, because it's people can understand what's going on.
Thank you. Questions? Yes, please.
Nishimura, freelance. Thank you very much for today. My question is a little bit related to Anthony's questions. Ishiba administration, about Ishiba administration. He is an advocate of the investment income taxation. So there is still discussion in the political community that this issue. So Can you explain what will the impact on the stock market if the politics introduce that issue? Thank you.
I think Ishiba-san mentioned about the increase of the financial income tax at the very beginning of his debate at the presidential election of LDP. But after he became a president, the prime minister of Japan, he denied of those kind of things. He doesn't have any intention to immediately increase the tax rate. So I think, and also he made a speech at the securities industries conference. Once a year, we have the beginning of October, we have a conference. We invite Minister of Finance, or last year, Prime Minister Kishida came to, he himself in person came to make his own speech. But this year, Ishiba-san made a video message, even though he was 2 days after he became a prime minister. He made a video message at the securities industry conference, and he doesn't have immediate intention to increase it, I believe. So I think, so I don't think that we will have that kind of negative impact from, his statement at all.
Interesting. Okay. If there's no immediate questions, although I would encourage everyone to take advantage of this opportunity to ask questions, but I was interested in your comments on the Japanese interest rate market and foreign participation in that. I mean, traditionally, Japan has financed a very large part of its own government debt. Do you think this could change? I mean, other countries, of course, foreign investors own a huge amount of government debt. Do you think there could be a shift in Japan in this direction?
I think, number of, the percentage of the foreign investors, holding a Japanese government bond is gradually increasing. That's for sure. But say whether we're going to have a rapid change of the ownership, percentage of ownership, I am not sure. But as far as futures trading market is concerned, we have many foreign investors are actively trading our JGB futures, and also trading volume of JGB futures are increasing substantially. So cash bond market is less probably, but a futures market, they are the main players already.
I see. So gradual, rather, yes, okay. Yes, right, okay. Questions? Yes, please. Yes, thank you.
Hi, I'm Jason Ng, a freelance journalist. I have a two-part question, so bear with me. The first part, you mentioned in your presentation that there were a number of factors contributing to the strong performance of the Nikkei. The first two being market transformation and strong company fundamentals of Japanese companies. And then the other two are geopolitical tensions in the region and a weak yen. I think it is important to get a sense, if to the extent you could quantify or just give us a general sense of the relative contribution, because the first two have something to do with Japan, the second two don't. I think investors are interested in knowing your view on that. And then the second part, if I could finish my question, is about corporate governance. In the US, it is the big hot topic issue in terms of climate change disclosure recently, and particularly relevant to Japan is the issue of gender equality at the board level and senior management. To what extent do you see that as part of the stock exchange's duty to push those issues? And to the extent that you do see that as the stock exchange's duty, are there going to be upcoming rule changes? Thank you.
All right, thank you very much. And the first one, bit difficult to give you the numerical, the quantitative analysis. I think, and also, the capital flows, it goes anywhere they want, right? I mean, whenever they are seeking for the better return. So I think, it's very difficult to give you a kind of percentage of the impact. It's very difficult. I mean, I don't have that kind of numbers in my hand. And the second question, yes, that's a very important question that, we have been promoting TCFD-based disclosure for all the prime companies, prime listed companies from 2021. And already we have more than 1,100 companies are supporting that kind of efforts. I mean, declared that they support the TCFD efforts kind of things. And but at the same time, SSB, Matthew, there's a new guideline for the environment disclosures. So I think now Japanese organization for accounting policies have been discussing what is going to be actual regulation in the future. So we will wait for the actual, the idea comes out. Then the Japanese companies will react accordingly. And I think, all the listed companies have a very good consciousness about the importance of environmental disclosure. And I believe that they will follow the new guideline of the accounting principle. And gender diversity, yes, is another challenge for us. And JPX as a listed company, we would like to be a kind of a model case for the listed companies. So we will achieve more than 30% of female board members probably next year. And but if you look at the entire Japanese corporates, I think the progress is not so good enough. However, the government, Kishida administration made a request or made a kind of suggestion that by 2030, all the companies should have a female board members more than 1/3. And we have Tokyo Stock Exchange has the recommended measures. This is not the mandatory measures, but the recommended measures based upon the Japanese government. More than 30%, not 1/3, more than 30%.
How far do you expect this shift? Households are beginning to invest more in equities now. Money is moving out of banks and from under mattresses. How far do you expect that shift to go? I mean, do you think...
How far?
How far and how fast, yes.
Well, as I said, the percentage of the stocks and investment funds of the individual financial assets is used to be less than 15%. June this year, it became close to 20%. And the U.S. is more than 50%, I believe, the household, and Europe is around 30%.
I'm not sure.
Yeah, probably around there.
Yeah.
So I think, the percentage in Japan is gradually increasing. And I don't know, I mean, to get the US level is a little bit takes time. But I know gradually going up, that's for sure.
So the psychology is actually changing.
And also the important point is that, it took 34 years that our index hit the record high since it hit the last record. But if you look at New York Dow, after they had a great depression back in 1929, it took 25 years. This means that once you have a very bad bubble burst, probably you need to have a one generation. Time to recover from that bad bubble burst. And that's the reason why, number of NISA accounts, very close to 50% is, held by those people under 50. So in other words, 34 years ago, when Japanese Nikkei 225 hit the record high 34 years ago, at that time those people were under 16. So that means they didn't get the direct negative impact from the bubble burst. Their parents might have been, but so I think those are the kind of the things we see, that several factors are at work at the same time. Is one of the things that those time factors, you can't make it faster. It takes time. So I think that's a bit different situation we see, and we are getting out of deflation, and also the new generation is getting older, and they can afford to allocate part of their income to the investment purpose. Those are kind of the things happening all together.
Interesting. Okay. Yeah, Calden. Oh, well, Calden, Martin's already had one question, so you go ahead.
Thank you, Anthony. Khaldun Azhari, Panoramic News. My question is about the wars and geopolitics. What impact, if any, the war in the Middle East and Russia impacting the stock market before, now, and in the near future? Thank you.
It's also another very difficult question. As of today, I think after Russia made the invasion into Ukraine back in February 2022, I think the major impact was not into the stock market, but for the inflation in Japan. The first, we are importing a lot of grain and also energy. So energy price went up substantially, and the grain price went up substantially because of disruption of the logistics from Ukraine. And then it started. We started, cost push type of inflation. Now we are trying to get a, the demand pull type of a virtuous cycle between the wage and the price. So I think war has the similar kind of things in the Middle East. I think if they lead to the higher energy price, again, that will have the impact in the Japanese economy, and then impact on the Japanese stock market. But we don't have a direct impact, a negative impact from Ukraine or from Middle East. But I know, yes, there's an indirect impact because of the deterioration of the situation over there.
Martin, you have another question.
Martin Kölling again. You described the changes that are happening in Japanese corporate governance and also market behavior of the companies. I wonder, are you surprised by the change that happened already? Looking back at your long history in the Japanese market, so what are your biggest surprises, and where do you see the biggest room for improvement going forward?
I think, Japanese corporate governance reform has been making progress since 2015, after we introduced the corporate governance code. But, because our corporate governance is principle-based, okay, comply or explain, it's not mandatory. So, the reason why we chose the principle-based is that, forced action maybe invite fierce rejection. But at the same time, incentivized voluntary change takes time. But we took the second one just because, the purpose of a corporate governance reform is to achieve sustainable growth and the mid to long-term corporate value improvement. That means that, unless the companies is willing to take voluntary actions, it is not sustainable. So voluntary actions are important. So we took the principle based, and every year by year progress was very limited or invisible. But after 9 years, yes, you notice that there's a change. But every year they had a progress, and now you see that change because of the 9 years has passed. So I don't think the corporate governance reform all of a sudden became a very a quick outcome. I think it's gradually changing over the period of time. And I think the driving force of the corporate governance reform in Japan was not only us, but biggest driving force was market itself. Like when you look at the CEO in Japan, we have, say, my term as a board member is 1 year, and about 2/3 of all the listed companies in Japan has their board member term as 1 year, and 1/3 has 2 years. So every year, 75% of the Japanese companies kind of at the shareholders meeting they have a endorsement vote for a CEO as a board member, right? And then in the past, the endorsement of a CEO as a board member used to be approval rating was a 95% or more, kind of unanimous endorsement. But now, Topics 500 companies, average is 90%. So because this is the average, 5% down is huge. And some of the companies, the Topics 500 companies, 63 companies have the approval rating of CEO less than 80%. So in other words, more than 10% of the companies of the Topics 500, these are largest 500 companies, have the approval rating of CEO less than 80%. So this was the very good wake-up call for Japanese companies to realize that they have to look at the shareholders as well, not only for employees or So I think those are a lot of progress we made, but there are rooms for improvement, as I said in my speech. And what is the least developed area is that probably some of the diversity of the board members. Diversity means that there's more than 98% companies have the non-executive board members, but diversity like a foreigner or female, a gender or a nationality is probably less. So we would like to see those. We included, we revised our corporate governance code to say about not only gender but also nationality is the diversification of nationality is also very important kind of things. But it takes time.
Yes, please. Go ahead.
Hi, Anton Bridge from Reuters. I wanted to ask about the list for improving capital efficiency. So you said that next year you're planning to introduce new measures which would look at highlighting companies that seek dialogue with directors. Obviously, you've just articulated that. Oh, sorry. Can you hear? You've just articulated that you do things on a voluntary basis, initiative basis, rather than mandatory. But I was wondering if you could flesh out exactly how you plan to encourage companies to really focus on improving their cost of capital, because obviously at the moment the list doesn't say the content of the plans themselves.
Well, as I said, we don't have a plan to make it mandatory. So the reason is that, as I said, that, unless the company takes voluntary actions, I don't think the reform is sustainable. So we suggest them to improve their content or the quality of their disclosure or quality of their plans, how to improve their capital efficiency. But also, there is we are the market operator. We are the infrastructure provider, platform provider. So I think main players on the stage is the investors or shareholders and the companies. So we would like to facilitate more productive or constructive dialogue between the investors and the corporates. So that's the reason why we are providing so many different kind of information for both sides, like good case studies, and also, as I said, that we are going to provide the bad case studies, even though it is anonymous. Good cases are with names of the actual names of the companies, but a bad case is an anonymous basis. All of those are kind of things, we are providing those information is that we'd like to enhance the quality of the constructive dialogue between the companies and the investors. So I think real power is in the investors or shareholders' hand to push companies moving forward.
Okay, thank you. Yes, please, the gentleman there.
Yes, Tamura from Bloomberg News. So my question is on the extension of trading hours. So trading hours will be extended to 3:30 p.m. from early November. Traders are concerned about the volatile share moves, given most companies still announce their earnings at 3 p.m. But I think that's also in line with the, what the JPX has been asking for, which is timely disclosure. So I'd like to, if you could tell us your thoughts on this, and if the JPX is thinking of taking any measures on this.
Yes, thank you very much. Yes, I think at this moment, probably 80% of the companies are disclosing their the earnings call after the closing of the market. And we have been, by the way, JPX announces our earnings call around 12 noon. And so that the investors can place their orders of buy or sell after they saw our earnings call. So we have been pushing Japanese listed companies to make it earlier than, do not delay the announcement 30 minutes because of our trading hours, extension is 30 minutes. So that's we have been telling the listed companies for a number of times in the past. And for the time being, up until our replacement of the matching engine is 5th of November. So we will make our utmost efforts to tell the listed companies to make their earnings call before when the market is open. But at the same time, I think there are still a number of companies are planning to. So this is probably the continuous effort, even though after November the 5th, our market extended. But I think by that time, probably limited actions we can do, but we will continue to do it in the future as well. It's not very direct answer, but but this we have been telling the listed companies a number of times, but not a lot of them are quite conservative to change the announcement timing.
Okay. We mentioned in the interim China. China's economy has run into various problems, and there seemed to be, a year or so ago, a shift of money, especially foreign money, from the Chinese market into Japan. China has now announced stimulus measures for its economy and for its stock market. So some people have suggested that there will now be a shift back of money from Japan into China. Any comment on that?
Yeah, I was in New York 2 weeks ago, and I had meetings with 15 different investors, and we, exchanged a view. And it used to be from the viewpoint of U.S. or European investors, Asian investment was probably 90% or more investment into China.
Yeah.
And after the geopolitical tension or U.S. between the U.S. and China relationship sours, I think a lot of investors reallocated some of their money from China to outside of China. And I think, China is still the very attractive company because their market is big and also their growth potential is very big. So nobody can ignore China as a investment target. But at the same time, the magnitude of the allocation of the funds may not be 90% or 95% of their allocation to Asia. So that means that, if, maybe half or, less, I don't know, but those money seek for other investment target, maybe Japan, maybe India. So Japan as a country where the democracy, rule of law, very stable regulation, and also the market size is big, economy size is big. So I think Japan is at this moment on top of the list as an alternative from China. But China, their status as a very potential, their investment target would be still there, I think. But may not be 95% of their Asian investment.
Thank you. Okay, there's time for one more question, if we have a question from the floor. Oh yes, Martin, fairly quickly, please.
Okay, you also mentioned the growth market. Could you give us your short review of the newest trends in the Japanese startup sector, and also explain why in Japan the number of unicorns is so low?
Yeah, next year we're going to see a unicorn, one of the unicorns. Yeah, this year might be, we will see number of unicorns are coming out to our IPO market. But as you said that, in Japan, I think we have more than 100 IPOs a year in the past 4 or 5 years, and probably we will have more than 100 this year as well. But as you said, small IPOs mainly. But the main reason is that, we don't have many investors who are willing to put later stage growth capital to the later stage companies. And the government or Kishida administration noticed it, so they issued, startup growth 5 years plan, all kind of things. And this is not because of the exchange, but it's the entire ecosystem we need to develop. And so I think, probably after we will see the new administration, we will discuss those kind of things, like how do we get the corporate sector to be a provider for those later stage capital kind of things. But I think, but at the same time, U.S. is the only market where the winning, later stage investors, number of, huge amount of money is available. Other countries like, UK, they increased, I think, a default percentage of the startup companies from 1% to 5% September last year. Means that, UK has the similar kind of problem. And other countries, I think all over the world, has a similar kind of problem. So I think, US market is in that sense a very special market where, you see number of risk takers and a very multi-layered risk takers available in the US. But other countries, including Japan, don't have those risk takers. So, but we have to develop this market very much. So we should have more measures to adopt, I think.
Okay, well, it is 1 minute before midday, so Yamaji-san, thank you for your very interesting and frank answers to many questions. We're very grateful to you. This, you were telling us earlier, is the first time you've spoken at this club. We certainly hope it won't be the last time, and to encourage you to come again, we'd like to give you a 1 year.
Thank you very much. Special status. Thank you very much. Thank you very much.
I think if you can, yes, you come this side, please, if you would.